There's a force that quietly shapes the energy market every single year, one that can either freeze or fuel your stock returns. So today, we're going to break down this fantastic article from Analytica Investor that digs into what it is, and more importantly, how to get ready for it.
When you think about what moves energy stocks, I bet your mind jumps straight to things like oil prices, big OPEC decisions, or maybe some major policy changes, right? But while everyone is watching those headlines, there's another huge seasonal factor that honestly often gets overlooked.
Yep, winter. The source material we're looking at argues that we really need to see it as way more than just a change in the weather. It's actually a critical annual stress test for the entire energy sector, and it affects everything from production all the way down to investor confidence.
Okay, so let's dive into the core dynamic here. The source calls it the Great Winter Squeeze, and it's this fundamental conflict that just plays out every single time the temperature starts to drop.
It's really a classic squeeze play. So on one side, you have demand for energy just skyrocketing as we all crank up the heat. But on the other side, the very weather that's creating that demand is also choking off the supply. It's a simple problem that ends up having these incredibly complex consequences for the market.
And we're not just talking theory here. These are real-world, on-the-ground hurdles. I mean, from the logistical nightmare of icy roads to the physical reality of pipelines losing pressure or, entire wind turbines freezing solid, any one of these can halt operations and just hammer a company's bottom line.
And hey, don't make the mistake of thinking this is just a fossil fuel problem. It's not. No part of the energy sector gets a free pass here. You might think renewables are safe, but heavy snow can blanket entire solar farms, and ice can bring wind farms to a complete standstill. The pressure is absolutely felt across the board.
So, if the whole sector is feeling the squeeze, how does that actually play out on the stock market? Well, the impact is definitely not uniform. Winter creates a pretty clear divide between the winners and the losers.
And you can see that divide emerge really clearly. You've got your larger, well-capitalized firms that often have the cash reserves and backup systems to just power through disruptions. But for smaller companies that are operating on razor-thin margins, well, a single prolonged storm can be financially devastating.
And we've seen this movie before, time and time again. You look at past cold snaps, and when those smaller producers couldn't meet demand because their equipment was frozen or deliveries were stuck, investors lost confidence, and their share prices took a nosedive as a direct result.
Okay, so we know this is a recurring problem. The crucial question then becomes, how can you, as an investor, actually prepare your portfolio for all this seasonal chaos? Well, the source provides a really clear playbook for building a more weather-resistant investment strategy. It's all about being proactive, right? You track the regional forecasts, you diversify your holdings, and, this is key, you really focus on identifying those companies that have already proven they can handle the cold.
And look, the point here isn't to turn you into a meteorologist. The real goal isn't to perfectly predict the next blizzard, but to build a portfolio strategy that is robust enough to react effectively, even when conditions get totally rough and unpredictable.
And this brings us to what might be the single most important takeaway from this whole analysis. See, winter isn't just about the risk, it's about what that risk reveals about the companies in the sector.
And what it reveals is a fundamental quality called operational resilience. Just think of winter as the ultimate real-world stress test. It exposes which companies have just been talking about being prepared versus those that have actually invested in winterized assets, smart logistics, and the agility to adapt on the fly.
And in the end, it all comes down to this. In the face of a challenge like a harsh winter, it's that proven adaptability that ultimately wins over the market. Investors are going to reward the companies that don't just survive the storm, but prove they can navigate it effectively.
So for a savvy investor, the big takeaway is to just reframe how you see the cold season. It's not just a threat to your portfolio, it's actually a valuable signal that cuts through all the noise and reveals the underlying strength or the hidden weakness of an energy company.
And that really leaves us with one final thought to chew on. It's time to look past the typical balance sheet metrics and ask a much tougher question. Are the investments you hold truly built to last through the financial chill? Are they ready for the storm?